Hello and welcome. I'm Suyash Maheshwari and you're watching Last Tick here on News 9 where we break down the day's action on the D Street. Now, Indian markets extended their winning streak to two consecutive sessions with Nifty surpassing the 20,000 levels for the very first time since mid-September. Now, today's rally was on the back of positive global cues as well as gains in heavyweight stocks such as HDFC Bank and Infosys. At close, Nifty was up over 1% to close marginally below the 20,100 mark. Nifty ended at around 20,996, 20,096 mark. Sensex, on the other hand, added about 700 points or so, or 1.1%, and was up above the 66,900 mark. The broader markets have continued to make investors richer. However, they underperformed headliners in today's trade. Now, the Midcap index has made a new lifetime high today, and the index is now on a 18-session winning run. The Smallcap index, which was struggling to break past that 13,900 sort of levels, also touched a record high, breaking past the 14,000 mark for the very first time. Now, if you look at the overall statistics for the market breadth is also favoring the bulls. Around 1,300 something shares advanced in today's trade versus about 1,000 shares that declined, about 1,100 shares that declined. Now, about 156 stocks on the NSE hit 52-week high, a fresh 52-week high in today's session, whereas about 13 stocks have hit a fresh 52-week low. 87 stocks also were logged in the upper circuit, and about 44 stocks were at the lower circuit in today's sessions. Now, among sectors, the banking pack has rescaled the 44,000 levels, and we saw a lot of short unwinding taking place today, which was also the weekly expiry day for the index. Now, the index on an intraday basis scaled past 44,600 mark. And we have not seen these sort of levels since October 12th. So pretty much levels not seen before in the last 1.5 months or so. The auto index also hit a fresh lifetime high. It was up 1.63% in today's trade. The IT index was also among the top gainers. It has also recovered most of the last losses of the last 3 sessions and ended as one of the top gainers in today's trade, up almost 1.5%, over 1.5% actually. Apart from the realty and the media stocks, all sectoral indices on Nifty ended today's session with good profits, with Nifty Bank, Nifty IT, Nifty Auto, Nifty Private Bank and Nifty PSU Bank all rallying over 1% in today's session. But with that, let's also bring on board Mr. Amit Gupta, founder at Fintrekk Capital. Hi Amit, thank you for joining us here on Last Tick. Appreciate you joining us here.
Yeah, hi, so yes, thank you for having me.
Now, with a 5% rally in the back, November so far is turning out to be one of the best, actually the best month so far in 2023. And the kind of run-up we saw in this month was primarily on the back of the global cues. Bond yields have come down significantly from their 16-year high by about 65-70 basis points. The dollar index has receded and it's now at a 3.5-month low. Oil prices have fallen substantially. But we have a lot of domestic cues lined up over the next 5-6 months, the biggest obviously being the elections. So, sir, what should be the strategy for retail investors for the medium to short term?
Yeah, right. I think in October, a lot of the global cues turned sort of positive for emerging markets, especially for India. So whether it was crude coming down or bond yields coming to 4.3 from highs of 5%. We have seen a lot of positives factoring in, and the momentum has taken the markets higher. One key thing is that the FI positioning was on the long side was very less at the start of the November expiry. It was, I think, if I remember correctly, it was about 11% or 12%. Now, obviously, that led to a very big short covering during the series around Diwali, and then the momentum has continued, and now we are at over 20,000. So I think the market is still in momentum. I think tomorrow we have the monthly expiry, and also we'll have the state election results soon on Monday. So the momentum can actually continue from here. However, the opportunities to invest is becoming less and less. The valuations in certain pockets of the markets have really gone out of the whack. I'm
Right.
not sure they are investable anymore. So any retail investor which is coming into the markets fresh or have recently come into the markets, the better would be to sort of staggered all your investments over the next 5 6 months, because with so many events being planned and already there on the calendar, whether it is elections or budget, we might also see Fed going back cut rates. I think a staggered way of investing would be much better in this sort of a euphoric slash elevated valuations market. And as we all know that India will have a very high growth pattern over the medium to long term. So I think that is not the issue at this moment, but it's how you handle the short term volatility and the fluctuations that would sort of define your returns over the next few years.
All right. Amit, week in, week out, we have been talking about the exuberance, the rally that's playing out in, the mid cap and the small cap space. And it does not seem to be slowing down. The mid cap index is on a 18-day winning streak. The small cap index has also clawed back all it lost last week. It's at a new lifetime high of about 14,000 or so. Valuations wise, are we approaching bubble territory?
Yes, I would say so. See, the liquidity works in a very funny sort of a way, in the sense that the maximum liquidity comes at the top of the market, and I think we have seen in the previous cycles also that is the case, whether it was 2018 market or 2021 market also. At this point of time, the retail money which is coming into the markets through mutual funds or direct investing is quite high, but the pockets which they are investing, that is debatable whether they are high valuations or not. What has happened in this particular rally, especially in 2023 rally, what we have seen in over the last 7 months, is that the money has actually come into the pockets which were sort of untouched for almost a decade. So for a decade, nobody touched defense companies, nobody touched PSUs. The railway companies were sort of trade in and trade out during the budget. So a lot of the money has come into these kind of themes, and even going forward, themes like clean energy, renewables, money is coming into those. So I can understand that mid cap and small caps can are looking like in a bubble territory, but again, it's a very stock specific kind of opportunity where if the valuations are in your favor, then you need to start building positions. You cannot sit on it for indefinite point of time, because otherwise the liquidity will force you to sort of leave out those kind of stocks or those kind of themes at all. But yeah, if you look at the headline kind of valuations, then we are definitely not in the cheap or even the fairly valued category. We are definitely moving towards a bubble category.
All right, moving towards bubble category. And Amit, talking about the mid cap and the exuberance in the mid cap and the small cap, some of these stocks have turned multi-baggers this year. And one of the biggest questions that a lot of young people ask me is that how do we book profits? So you being an investor, you being an advisor, you being a technical market expert, what will be the guidelines and how should one approach profit booking?
Yeah, right. Also, I think it's a very stock specific call. One cannot take a broad market call at this point of time. So, for example, I can talk about my experience of the past 7 months. We were quite invested in PSU banks and defense companies over the last 1.5 to 2 years almost, and we have definitely taken profits off the table. The pockets like even the capital goods, they have become multi-baggers, 4x, 5x kind of returns they have given. A lot of railway stocks have given very good return in a very short period of time. So my parameter for exit, even it is partial exit or full exit, it is that if a stock is rallying 5x and that is not supporting the valuation call
Right.
you are making, then you need to take some profits off the table, even if you are bullish on a sort of a medium to long term perspective. You need to take some profits off the table because there will be time corrections, there will be price corrections in these kind of stocks. So it's a portfolio rebalance kind of a thing where you take out profits from the overvalued themes and you put it into a sort of undervalued theme from a market perspective.
Now, you gave us a number of sectors that are looking overvalued at this point in time. What are some of the sectors that are perhaps looking as, valuations wise, a attractive buy?
So I think chemical as a basket is looking, sort of bottoming out. The numbers which are coming out in this quarter, the Q2 quarter, that clearly shows that the pain is almost over. I say almost because there could be stock specific pain still left into the markets. But if you look at the overall basket, whether it is specialty chemicals or it's agrochemicals, then what we are seeing is that the pain is mostly over. The growth is a little debatable whether it will come in Q4 of this financial year or Q1 of next financial year. But it is quite clear that the sector is bottoming out, and in fact, as a full disclosure, we are actually building positions in these segments. So both specialty chemicals and agrochemicals look good for start building positions in the next 2 3 months.
All right. Sir, another sector that I wanted to pick your brains on is, of course, the Nifty banking pack. The banking pack in overall has been a laggard this year, but in the last 5 6 sessions, we have seen good momentum build up, and on expiry date, it was one of the best performing sectors. Rescale that 44,000 mark, built onto that, and we even touched 44,600 sort of levels. Is that a sector that could perhaps take leadership role going forward, given that FIIs are also returning to the Indian markets?
So I think FI's flows into India is still net negative if you
Right.
look at on a year-to-date basis. Obviously, in November, there have been some buying, but that most of that buying has been triggered by short covering rather than long positions. So my view has always been that if FIs are negative on India, then the banking sector or the bank Nifty will always underperform. In most cases, there could be stock specific situations where there could be a rally in but that particular stock. But as a whole, in the bank Nifty or the financial space, uh, since the weightage is so much in the FI's portfolios, every time they have to sell India, they have to sell some sort of banking exposure to that. Having said that, I think the valuations are in favor of, from a medium to long term perspective. The asset quality is better. The credit growth is coming. Hopefully, the private capex will also come back probably after elections. So I think there are triggers which are positive, looking positive for a medium to long term perspective. But I think in the short term, we have to wait and watch. It's a overweight sector in most of the portfolios, especially the mutual fund portfolios. So it's a bit of a wait and watch to see how much it can pull through. My sense is till the Fed does not change its stance and we start seeing rate cuts, banking sector can continue to sort of underperform or perform in line with the benchmark only.
All right, shifting focus from sectors to specific stocks. We had a big listing today. The stock of IREDA made a stellar debut on the bourses, almost doubling investors' wealth in a single session. Now, my question to you is that should one hold on to this stock, given that the issue received such an overwhelming response from institutional investors, which are typically considered as long-term investors?
So yeah, I mean that's how the IPO markets work. It can open 10 expected return was about 10 20%, and it has opened almost at 60%, almost doubled actually the value. So see the difference between the existing finances, power finances, which are PFC and REC, and IREDA is the valuation parts. Now the PFC RECs were available at 1.5, 1.6 times the book. This was at a 32. This was available at 1.1 times. Now, since the listing gain has been almost 100%, I think that gap sort of narrows down. But it does not leave too much scope further from here. But obviously, there is one more option now to play the financing cycle, given that it exclusively deals with green financing, and we have got some, really good targets for the 2030 clean energy program. I think the medium to long term is really good for the company. For a fund manager or for an analyst like us, it just gives us an additional option to explore. But my sense is that the at this point of time, with these kind of listing gains, the valuation gap has gone away. It does not leave too much of scope. But I'll keep it on a radar. Maybe if there is a correction in the future, then we can have a look at it again. Also, REC and PFCs are proven player, but IREDA needs to prove, how well they can do when they are listed into the markets.
All right. So another stable of stocks was the Adani Group stocks. Some of these stocks have been on a stellar rally in the last couple of sessions, extending their winning streak to about 20-30% in just a matter of 2 days. For investors, is this the opportunity that they should perhaps look to book profits at, or is it time to re-enter the stock, given that a lot of these uncertainties regarding the entire Adani Hindenburg has been somewhat put to rest?
So, I mean, I cannot speak specifically about the stocks because we also don't own any of these stocks.
Right.
But obviously the news flows have been there. Supreme Court has given some positive comments. SEBI has also said that out of 24 or 22 cases, there is no case against the Adani Group. So I think a lot of the investors are waiting to hear those comments before buying them fresh. In addition, I think they've launched some hydrogen plants also. In the Mundra, they have launched a green ammonia plant also. So I think it's probably the news flow which is working in their favor. My sense is that over the next few months, it's going to be highly volatile stock, given the news flow from the politics which will come and hit the markets. Until unless you have a sort of a 3 to 5 year kind of view, the investment may just you might just hold it back. For traders, I think it's a good stock because it's high beta, highly volatile stock. So you'll always find people buying and selling it on a intraday or very short term basis on the momentum. But I would for investments I would wait and watch for the next few months.
Now, sir, before we let you go, a very interesting thing happened last week where, Geo Financial Services has in fact requested RBI to get converted from an NBFC to a core investment company. Can you help us understand what a CIC is and what will be the implications for the investors of JFS?
Right. So I think the move came in a response of a directive which was given by the RBI only, which sort of mandated that Geo Financial should convert from a NBFC structure to a holding company. Now, as you know that the Geo Financial has a lot of diverse verticals. It does not just have lending like a typical NBFC. It also has asset management, insurance, and all these entities are there. So the decision to convert it into a CIC, core investment company, that stems from the dissonance between Geo Financial's current balance sheet and a typical structure for a NBFC, because it does not. The current balance sheet does not have the assets and the business structure which is required of a NBFC. Uh, in addition, there are many subsidiaries. So you'll have payrolls, you have insurance, you have asset management, etc. And all these categories does not define for pure play NBFCs. So the conversion to a CIC structure would bring more transparency to Geo Financial business model. and sort of help in true value unlocking over the long term. The company's even the current valuation had faced challenges because it's unconventional structure. There is a holding company discount to it. So hopefully this move from NBFC to CIC that would sort of address this issue. It would allow for a more accurate reflection of the value of each of the subsidiaries which they are planning to launch or they have already launched. My sense is in for this kind of move, the long-term impact remains uncertain, but it sort of becomes a pivotal point for investors to witness the right value of Geo Financial's diverse ventures.
All right, that's Amit Gupta for you. Sir, thank you for joining us here on Last Take. Appreciate your thoughts. Thank you.
Thanks, Suyash.
But with that, we've completely run out of time on this edition of Last Take, but keep watching News 9.